And welcome back, guys. So in this particular session, what we'll be looking at is SPR's thingy. Okay, so we'll be looking at March exams of SPR, and then what we've been given is that we've been given this particular question regarding crochet, and then uh, what's the background? Let's look at it. Okay, so Hummings Co is a parent company of the multinational listed group of companies. Hummings Co uses the dollar as its functional currency. Hummings Co acquired 80% of the equity shares of Crochet Co on 1st January 20x4 and 100% of Quiver Co on the same date. The group's current financial year end is 31st December 20x4, right? So okay, so Hummings Co is a parent company with a multinational, and then after that, what it did was it acquired 80% of Crochetco and 100% of Quiverco, right, in the financial year on January 1st 20x4, right? So on 31st December 20x4, we need to prepare a consolidated financial statement. So Crochetco's financial currency, functional currency, right? So the head office of the Crochetco is located in a country which uses dinar as its main currency. However, okay, the country is which influences it or which it operates is basically dinar. However, the staff are located in variety of locations, a variety of other locations. Consequently, half of their employees are paid in dinars, other half are paid in gromets. That means primary factor will not be conclusive because there is a payment in dinars and half is paid in gromets. So there is a high degree of autonomy and is not reliant on Hummings Co. This will be very important statement, this particular part, and nor do the sales of Hummings Co make up a significant proportion of their income. This will basically satisfy the third factors. Okay, so all of the sales are invoiced in gromets and therefore raises most of its finance in gromets, right? So all of the sales are okay. All of the sales are invoiced in gromets, and then cash receipts are retained in both gromets and dinars. Does not so Gromets Co does not own a bank account in dollar bank account, and then Crochetco is required by law to pay tax on its profit in dinars. So some of them were saying like, okay, Crochetco is required by law to pay tax on its dinars, right? So this last statement gives them a bit of uh, thingy, but I don't know if they have not studied well or something. So like they used to come up with this solution. Okay, this perception, I guess. So the equation is all about calculations and also first of all, let's look at our first requirement. Okay, our first requirement is how the functional currency of the Crochetco should be determined, right? So let's write it down. Number A, right? Number A. Uh, Functional currency. What I'll do is I'll just increase the font as well so that you guys can see properly. And then let's increase this as well. Functional currency FUN. Sorry. A functional currency is the currency of the primary economic environment where the entity operates, right? So it's the currency of the primary economic environment in which the firm basically operates, right? So that's our functional currency. So don't need that quickly. In order to determine this, In order to determine functional currency, the primary factors should be considered. So what has happened over here in case of primary factors is that, oh shit. Okay, so what I'll do is I'll have to do this and then start a bullet point. Okay, so what is the primary factor is the currency which influences, or currency that mainly influences the sales price. That's first thing. Sales prices for goods and services. Second thing is the currency of the country whose competitive force and regulations, I think so, yeah, regulations mainly determine the sales price of goods and services. Right, that's our second condition. And then our third condition will be the currency in which or that mainly influences that mainly influences labor, materials and other costs of providing goods and services. That's our second condition. Okay, then after that, what do we need to also say is that if these, or if the primary factor is inconclusive, in the following factors should also be considered. And what are they basically is, I'll just put a bullet point, and then they are the currency in which funds, or the currency in which receipts from operating activities are retained. Okay, so second criteria in this is the currency in which funds from financing activities are generated. Okay, that is our third condition. And then even if this is conclusive, then what we basically do is that if secondary, okay, its name is secondary factor should be considered. If the secondary factor is also inconclusive, then the following factors should be considered. What do we look at? That basically is first thing that we basically look at it, whether the company is a subsidiary or not. Like, I mean, it's an independent entity or not. Okay, so whether cash flows are readily available for remittance to the parent. Otherwise, like if you are not, it's not a foreign operating kind of thing, then you don't need to have that cash flow like uh, straight away. Like you don't need a remittance service for that, right? So if you're just operating on your own, and then the level of transaction with the parent entity. Second thing that third thing that we need to consider is whether the foreign operation or the foreign operation operates as an extension of the parent rather than, or what we could basically just say is that the level of autonomy, right? So no need to write all this long thing. Level of autonomy. So in this thing, what I'll write is financial and decisional. Okay, not only financially sufficient but also decisionally. Okay, so the third point is whether the company can repay its debt obligation on its own, and that is basically without help from parent. That is also a significant indicator of autonomy, right? Next thing is we will look at the particular question in this scenario. So in case of crochet, if you look at it properly, the country in which it operates is dinar, right? And then the currency that mainly influences is basically the currency influences its which influences uh, its sales price is dinar, but the input costs in this case or I would just say labor, right, is paid in both dinar, I mean gromets and dinar, I think so. Dinar, right? Isn't that what it says? Are paid in another are paid in currency of dinar, yeah. So the primary factor is inconclusive. So the primary factor is inconclusive, and then looking at the secondary factors, the operating or the cash receipts from Yes, receipts from operating activities are retained in, what does it say? In most of the financial gas receipts are retained in both grommets and dinar. Are retained in both grommets and dinar, and the funds from financing are generated in grommets. Are generated in our invoiced proportional raises most of its financing grommets, right? Are raised, just say raised in grommets. So even this is inconclusive. Conclusive, considering now in such circumstance the additional factors mentioned above should be considered. The company, as per the question, as per the question, the company enjoys significant level of autonomy. The company enjoys significant level of autonomy, uh, nor do the sales to parent make up significant proportion of sales. What is there is not reliant on finance, and the entity or the foreign operation is not reliant on parent to parent for funds, I think so. What does it say over here? It doesn't say any services, debt, or reliance on finance, right? So it's not on reliance on for finance. Let's just write that same word. So as parent. All right. So this is how we basically answer this kind of question. Okay. So first of all, what we do is we write down the requirement as per our actual IAS 20, the effects of changes in the effects of changes in foreign exchange rates, right? So as per that, we write down all the requirements. So based on that, what we did was we basically use that particular requirement in this case of crochet. Okay, so you don't have to write this long. The model question or the model answer also does not really suggest this long answer, but what it did was basically it just used this particular format. Okay, it just used the learned concept. That's pretty much what it did. But what I normally like to do is, first of all, I would like to basically point out or just provide the requirement as per the IFRS, and then after that apply it to the scenario. Okay, so basically in this case, in the first paragraph, what it was, I applied the primary factors, as you can see over here, right? Then in second paragraph, I applied the secondary factors. Even this was unconclusive. So what I did was I applied the additional factors, and then I missed something. You know what I missed? Hence the functional currency. I forgot to conclude. Hence the functional currency of crochet is grommets. Now this will be very crucial, okay, in this particular question, because what we have over here is that in the second requirement, what we need to do is basically about intangible assets, I think so. Yeah, it's for customer contracts. But in B2, we need to calculate the net assets of Crochet Co. But what has happened is that the Crochet Co's net assets are in two different currencies. Okay, so let me just show it to you where it is. Acquisition, right? Hmm. The total net assets denominated in grommets was 43 million. The total fair value of the net assets denominated in dinar is 50 million. See, there is two different currencies. So what you will be doing is that basically your cash paid and then your NCI, and then you when you subtract your less net assets, you will need to put in two different things, and then you need to translate the dinar to grommets because the functional currency is grommets now. Okay, so we will definitely look at that. For so this is getting a bit long, so enjoy your question, and then we will look at the second part in other video. Okay, until that time, bye bye, take care.